This conference will now be recorded.
All right, as always, everything that we're going to be talking about today is for educational purposes only. Nothing is intended as any type of investment advice. So before we get into our questions, we're going to do that. Then I'm going to come back to my topic. There's one thing that I want to talk about first. That, in my opinion, is so extremely important as a trader that it can't wait. So we'll get to the other questions, but this is something that needs to be thought of coming into our mornings. All right. What was the stocks every single person was focused on at 9:30 this morning? Two tickers I'm looking for. What were the two tickers every single person was focused on this morning? See, Keith, SFIX, I'm glad that you were, but that's not the answer. And you know what? That's even better, to be completely honest. A lot of you are saying SFIX, and you're going to see that this is what I have up on our screen. There's a reason for it. Okay, so you have OGEN. Okay, that was one of them, but really IGC and NBEV. Now, I don't know if anyone really paid attention to this, and I did this for a specific reason, but did anyone see me post anything about them coming into early this morning? If you go back in the chat room, and this is something that I personally do every single day of my life, but did anyone see me post anything about either IGC or NBEV? Okay, we talked about it in the meeting, obviously, because there's definitely going to be trades there. No, didn't say a word. All right, and there was a specific reason behind that, because yes, there was definitely things there, to pay attention to. There was certainly good information that was going to tell us, it's going to eventually make a monster trade. But something that we have to remember, and it comes, a lot of it has to do with picking the right stock coming into the morning, or picking the right stock to actually focus on. Did we know 100% what had to happen in either of those stocks? Because essentially they probably should have pulled back way more, but they're exception stocks, right? So if we talk about the rule versus the exception and the things that I try to force feed you guys when it comes to these rules, did we really know exactly what was going to happen? Yeah, we knew there was so much buying, the stock's going to go up eventually. But did we really know exactly what should happen with those trades? No, we didn't. Because it really it could have went either way. Now, yeah, the prints today showed, pretty closely exactly what's going to happen. But yesterday, if you recall, IGC right before the close had huge buy prints at 9, which essentially any rule stock is going to bring us underneath that 9 before we would end up coming back up. My main point here that I'm trying to get across is that what's the higher probability trade, an exception or a rule? And the better question here is, which one is going to make us rich? Are we going to get rich off exception stocks? Because believe you me, I've made tons of money on these exception stocks. Okay, I'm not, there's no doubt, no lie about that. You guys see when I call out certain things. But at the end of the day, anything could have happened. To be a consistent and profitable trader, we have to follow the rule time and time again, exactly what Connor just said. It's more important to take a trade that we know something is going to happen 90% than it is on making money on a stock that does something crazy. Now, we'll go back to TLRY. TLRY went to 300. How many of us here made our entire career off of that stock and are done? Don't need to ever do anything ever again. Anybody here? Out of curiosity. Because I know I sure as hell didn't. And most people that's not going to happen. I didn't even trade it. And you know what? A lot of people aren't going to, because when a stock's that crazy, you can't really don't get me wrong. TLRY did give us some really good, entries and did show TLRY is kind of the exception. Usually when a stock goes to 300, it's very, very hard to read. TLRY did give us a lot of, easy stuff to come out there and understand what was going to happen. But that's not what day in and day out we're going to do. Think about it. You have two different traders. All right, so you have the one trader that every single morning follows the rule stock that shows exactly what's going to happen. And then you have another trader that basically takes a calculated shot from the hip to try to find exception stocks, because we get these stocks that just do crazy things, that just start running, and and there's tons of money to be made there. Do not get me wrong. But if you are not at a point where you could trade more than one stock, if you're trading one stock at a time, where is your hard-earned money always going to be better spent? The exception stock or the rule? And that's a pretty simple question, because the rule is it's giving you a lot less exposure to risk because it does what it's supposed to do. IGC right now, I don't care what the prints say, and the prints are telling us we're going to see a lot higher, and 15 is a very conservative price target. But is there anything out there, and we've seen this many times before, is there anything out there that says in IGC right now, okay, that this stock could not sell off down to $2? Is there anything out there? Exception could be gambling, in my opinion. David, it's gambling when you don't follow exactly what's happening and you get excited, and basically you take a shot from the hip. You see a stock start moving, boom, you press, and there's in exception stocks there's certainly calculated shots from the hip, but it's not following a specific rule. Any second right now, and I know I bring up LFIN all the time, but if we had to classify IGC as the type of stock, would we say volatile? Oh, look at the as we're talking, by the way, I mean, it's just confirming, but you're going to get my point from here. If we come back, look at this buying that just came in at that 14 level. There's no way that, well, no, so statistically speaking, it has to hit 15. But overall, it's still an exception stock. Anything can happen. Is Facebook more than likely just going to drop, let's say, $10 in a second? Okay, barring any type of ridiculous news. But statistically speaking, is that going to happen? No, it's not going to. So following the prints in a stock like that, it's a rule stock. Now, there's days that Facebook will be an exception, but for the most part, and when I say Facebook, I mean Apple. I mean these stocks that have some type of substance behind them, and not even that, because there's other stocks that are rule stocks. And then we're going to talk about SFIX in a second, but there's other stocks out there that are like that are just doing what they're supposed to do. Even though they're not I don't know what SFIX does as a company. I don't care. But it's not crazy. When we get these cheaper stocks, these are the most volatile stocks that you're ever going to have. There's nothing to say right this second that IGC isn't going to just plummet to $2 and tons of people lose money, because I'm going to give you the perfect examples. LFIN. Okay, LFIN showed we were going back to 100. It got halted, and that was the end of it. Okay, I know me personally lost more money than I will ever even speak about. Wasn't a big deal. I know the risk I'm taking when I come into an exception stock, but you have to know your place within trading. And this is where it kind of comes together. You have to understand that every single person is at a different level of trading. Some of us are very close. Some of us, are way far apart, but it depends what part, where your actual place is and your ability level, and not even your ability level, but your risk level. Because your ability level, you could be the best trader in the world, but if you only have $10,000, can you afford to put $10,000 on a stock like IGC? Is that a smart way to go about trading? See, a lot of us traders, and this is once I'm finished the question, we're going to get to the topics of entries, because knowing something has to happen is very different than a trade presenting itself and a trade actually coming to fruition. Okay, these cheaper stocks, they're my favorite by far, because you can usually trade a lot of shares of them and they're very cheap, okay, which helps you even trade more shares of them. But coming into things, this morning, They're the best stock by far. And I didn't even find this morning. I forget who did, but they called it out in our morning meeting. I looked at it and I loved it. Had great selling at 35. There wasn't really anything that was too crazy. And then coming into that 34 level, which let me pull it up so you can actually look at it. Okay, coming back down into here. Okay, we had beautiful selling coming in at that 34. So my main point here is that everybody wants to hit the long ball, and that's the best analogy that I could give you. Everybody wants to go out there and hit, 50 home runs in a year. Okay, out of the best home run hitters, if you put, we made a chart and we showed what are strikeouts? What's the correlation between strikeouts and home run hitters? For any of you sports fans out there. Citron just sent out news about IGC. I'm sure they did. Exactly. The best home run hitters have the most strikeouts. It's a direct correlation because they're power hitters. I'm a big baseball fan, so it's a great analogy for me. Okay, but they have the most strikeouts, and the reason behind that is because when instead of trying to hit a ball, a line drive or trying to get a base hit, what's going to happen when you swing for the fences every single time? And Kyle, my Mets are done. I'm all for the Yankees. I'm not one of those Mets fans that that doesn't want to see the Yankees go. I'd rather we keep it in New York. But that's besides the point. Tim Tebow hits bombs or strikeouts. He might have a 5-to-1 ratio strikeouts. But you guys understand what I'm saying? So when you swing for the fences every single time, yeah, everybody wants to go out there and get that hot stock that just runs up $300. But we cannot build careers on that. Okay, a lot of the time, catching a stock, ego comes in. Because you see a stock that's moving so much, it's almost, your ego comes in and you wanna trade that specific stock. But if we look and we come back over to IGC from this morning, okay, for the first, let's say we'll say right here, for the first 40 minutes, was there anything that you could do with that stock? Anything at all that you could have done with that stock for the first 40 minutes? Trigger anything? No, you couldn't. But how many of us, and you don't have to say if it was you, but thinking, and this is, once again, I'm not paying your bills, you're not paying my bills. What you do, it's in your own head, and you have to understand what your problems lie within. But everyone was so interested in it. But guess what the best stock out there today was? And don't get me wrong. Did I watch IGC and MBEV? Hell yes, I did. There's no way in hell I was not going to. But I also trade more than one stock. So the fact that even though I was still watching it, there was nothing for me to do. I couldn't trade it. There was absolutely nothing there to do anything with. SFIX gave us a perfect high probability trade, and not once, not twice. If you go back into the high probability chats, and I made sure I put it in there because I knew I was going to talk about this when we're coming in. I just saw so much interest. And if you were talking about what's it called? The other if you're talking about OGEN, you know what? That wasn't a bad stock for you to be looking at. So if you're looking at OGEN instead, that does not, has nothing to do with what I'm talking about right now, if that's your specific situation. But what I'm talking about is the fact I saw so much chatter about those stocks. How many of you missed SFIX? How many of us missed that because we were focusing on hitting the long ball instead of getting a base hit due to a meeting? Well, if it's due to a meeting, that's completely besides the point. But if you're sitting there watching, the stock gave us a beautiful move, and I was trading it before that. But then 33 came up, and guess what? It was perfect. And that's when I started posting. Remember, when the market first opens, I got to make my trades too. Okay, so once I get settled in and everything, then I start going. But even 33, the stock's now at 30. Is anyone here ever going to be upset with a $3 day Forget about a trade, but a $3 day. Anyone ever going to be upset with that? And Eddie, if you were an OGEN, can't blame you because I was trading OGEN too. But what I'm saying is that when we focus, okay, and the morning comes in, when we get something that tells us this has to happen, and it's just a rule, that's what we need to focus on. And Pritesh, I wasn't going to say it that way, but what he said, more importantly, if the whole room is talking about IGC and Rich is the only one talking about SFIX, there's something wrong. And that's where I'm coming from. And that's where this, because it's so damn important. Okay, yes, there's money to be, don't get me wrong. Like I said, IGC, I mean, it's phenomenal. NBEV, phenomenal. Okay, I'm going to trade them all day long. But at the same time, what was the best trade? Because a high probability trade in a stock that's getting bullied is not really a high probability trade. Guys, what happens after a stock is done getting bullied? And I know we brought this up last week, but if we're talking about, a stock that comes out there and we just see it getting pushed and pushed and pushed and pushed. I asked you, how many of you would bet your accounts with me? I'll bet you your full account that an IGC will still be trading in 2 weeks. Now, is it hot? It absolutely is, but I'm not betting my account on that. I have no idea what's going to happen with IGC. Blockchain was the best thing ever. Okay, I know that I lost more money than I've ever lost in probably my entire career in one trade because of that. You guys see the point that I'm trying to get at? There's certain things that you need to watch and need to pay more attention to that are better worth your money. Because if you want to take a shot, believe me, I take shots all the time. Okay, and you know what? I've earned the right to do that. But taking a shot is not a way that we're going to be able to consistently make money every single day. What would you rather do? Would you rather make $100 on one stock in one day or $300 in multiple stocks over the course of a year? And obviously, I'm talking about shares, and I don't care how many shares you're trading. But which one are you better off doing? And which one statistically is more likely for it to happen? So the whole thing here is that, yes, the hot stocks out there, they're fun to watch, they're fun to trade. You can make a ton of money on them. Don't get me wrong. I'm never going to say don't trade those stocks. I mean, that you'd be absolutely nuts not to. But if you're let's say, from 1 to 10 is the level of your trading. If you're anything under a 6, you have to find a stock that's a 6. So SFIX with the selling at 30 still needs to go into 30. Absolutely, without a question. Okay, so you guys tell me right now. Okay, the prints that we saw at 30, I posted them out there. Go into Discord and look at them. What are our expectations versus our price target? And I'm going to wait here until you guys tell me, because I've talked about this over and over again. I'm trying to drill it in. But this is how you get rich. You don't get rich off one stock. And there's people out there that have, but guess what? If you count the amount of people that are consistent traders that are rich compared to the amount that get rich off of one trade, you know what that ratio would look like? What would the ratio of those traders look like? One guy getting rich off of one stock compared to people consistently. Market maker versus retail. Exactly. It would be, it would just be astronomically how crazy it is. Just like the home run hitters. Keith can't say it better myself. That's exactly it. And this is something that I need you guys to focus on, because when I see an entire chat room going up to talking about something else, then the highest probability trade that I've seen this entire day, and there were some good trades that came out there. Don't get me wrong. There was a ton of trades there. But you're talking about $3, and not only $3, but this stock has to pull up. So now on a stock like this, the pull-ups, and this is another thing that I wanted to talk about as well, because I know a lot of people were expecting bigger pull-ups. Does SFIX pull up much when it gets prints? And if they did, they lost in the next trade. And if not their next trade, Eddie, then you know what? They're going to lose it over the course of a year. You're not going to keep that money. Getting lucky and making money on a stock that runs and does something crazy, if you don't know how to trade, what's going to end up happening is you will give it back. It just bought you time. That's all it bought you, was more time to trade. It did not make it so you're going to be able to continue to do this as a career. Reminds me of Bill Ackman. Well, very similar. Okay, so with the prints that we saw at 30, we're going to want to start at 50 cents. And the reason I say we start at 50 cents is because all day long, what it showed us is when we get some prints, we only pull up like 25 cents. Remember, we got to understand the personality of the stock. Okay, not every single thing fits into a cookie cutter explanation or definition of what the stock is going to have to do. Okay, we can't expect that. So if a stock keeps doing the same thing over and over again, guess what? We have to understand what that personality is. So I'm going to start with 50. That doesn't mean it's not going to go to 31, but what's the only reason that we go short again on this stock to go under 30 if you're not already still in it? What's the only reason that we end up going short again? You know what? I'm going to finish my topic, and if I have to spend more time to get through the questions, we don't really have a ton of questions to go in there. Okay, so not new selling, Keith, because we got the new selling at 30. Okay, so we have that new selling, but you're absolutely right. If we didn't have new selling at 30, then we need new selling first before we even do anything. But yes, we need a trigger down. So when we look at a stock like SFIX, and this goes into what I just say, these topics, most of my topics come up from what you guys say, because I just want to, I see certain things and I want to stop them from happening so you can understand how to use the methodology that comes into it. But right now, we know this stock has to go under 30, right? Okay, it's plain and simple. Big selling at that 30 level, on its way to push back down. It's pulling back up from it. So statistically speaking, the stock has to go under 30. Okay, just because it has to go under 30, is that a reason to trade it? Is that ever a reason to go short? Absolutely not. Ever. But one of the, and I always say, obviously, I only have my experience and my students' experience of the people that I've taught. Okay, but one of my biggest problems in the beginning of trading was getting too excited and trying to jump the gun on things that were not there. A stock moves a lot. What is our first reaction? Okay, as a human being, a stock starts moving a lot. What's our first thought that comes into our mind? And I don't care who you are, unless you are literally a psychopath, this is what's going to happen. You have to train yourself to this. Okay, this is not, I've never met a trader that was born this way. You have to train yourself to this. But of course, your mind says, I want to make money too. Doesn't mean you're necessarily going to hit the button. Okay, it doesn't mean you're actually necessarily going to take the trade. But when you see a stock moving a lot, your first reaction as a human being is, I want to make money too. Right? Anyone ever see a stock go up $5 before and not wish they traded it? Has that ever happened to somebody? My heart starts beating fast and my mind asks, why I'm not in it. Exactly. I mean, that's just a normal reaction. That's why psychology of trading is so much, and in my opinion, so much more important than understanding how to trade. Okay, because you could know how to trade better than anyone else in the world, but if you don't have your emotions in check, what's going to end up happening is you're going to make stupid mistakes. But the funny part is, when you make that stupid mistake, you know exactly what happened. So it's literally, it has nothing to do with not knowing how to trade. You're fine. You look at it and you're like, I'm an idiot. But at the same time, that psychology aspect of it can kill somebody that knows how to trade. So when we see a stock start to move up, yeah, that's what our natural reaction is. We see a stock like IGC, it's hot, it's going to move a lot. Let's get into it. But what about a stock like SFIX? What was more enticing in IGC? If we really break down everything that I've just been saying right now, what was more enticing than what was in SFIX? because SFIX, we knew exactly what had to happen. Okay, and within IGC, we had to kind of figure out what the stock was going to do. Do you see the difference there? We know overall, it's not that hard to understand overall where the stock has to go. But we need to know what the stock is actually going to do at that moment. Which stock is better for us? Which stock is better for our money? Okay, so right this second, I mean, the best way I could put this is, let's say, you have you're going to enter a hedge fund, and you have two options. One option is you take all your money and you put into a stock that's hot right now, that might do something crazy, but it also might go to zero. Or do you take the stock that for an 80% chance you're going to make a bunch of money on it? Which one would you take? Really, as anyone that's trying to sell you on this, it wouldn't be that hard of a sell for one of those options. Yeah, the first option would be financial suicide. That's exactly it. IGC is much, the reason that it's such a hard trade, and it hasn't been a hard trade, and I don't want to say it that way, but there's a lot of things it didn't do that it's supposed to do. But when you're trading an exception stock, do we really care that much, to be honest? Is it really that big of a deal? Or you know what? Can we take a calculated shot? Because exception stocks are exceptions. They do things that, you know what, it didn't pull back, that's okay. Right now, I'm not going to not trade IGC because it didn't pull back under 9. That's not going to happen. I'm still going to trade it because of what it shows. But that's not where I'm going to be. That's not where I started from, is a better way to put it. When I first started trading, until I was consistently making money. Now, every single day I will have a losing trade. It is a guarantee. I promise you, no matter what day it is, I will have a losing trade. There's no such thing as a day that I won't. But I'm not going to have a losing day. And that's the most important part of consistency. Because losing trades are going to happen. Certain trades do things they shouldn't do. Okay, and it's not even that they shouldn't do, but it just didn't follow percentage. If you take an 80% trade, there's a 20% chance of it being wrong. So no matter what, if I take 10 trades that are 80%, 2 of them I'm going to lose. Big deal. Don't care about it. But that comes from 90% of my trades being a rule, and the other 10%, I can use that profit to play around a little bit. But if you're only trading one stock, think about it. Are you going to have those 10 different trades to fall back on? If you're only trading one stock a day, those 10 trades are going to take 2 weeks. So you don't have that percentage with you. So if you're going to take a trade, it has to be the 80%. It can't be the, chasing something that's very enticing. Okay, we talked about this morning. I wouldn't be surprised if they ran it up a little bit at first and then brought it back down. That's exactly what they did. But we got buying on the way back up. They brought it back up. That's all fine and dandy. But there's no reason we should be trying to find something or be looking at something when something else says, guess what? I'm an 80% stock. Take me. You see what I mean? We get caught up too much in the flash. Okay, I'm not a flashy person, and that's just my personality, and just that has nothing to do with trading. I'm not a flashy person at all. Okay, but at the same time, I take that with me in my trading. I don't care. You know what? Am I gonna, because I trade, the amount of stocks that I do, am I going to end up catching, these giant runners? Yeah, I am. But guess what? When TLRY went up to 300, do you really think I made that much money on it? You can't hold a stock for $300. And if you do, you're absolutely batshit crazy. That's not where I make my money from. The money where I make my money from are the stocks that show 80%, and I could buy a lot of shares in them. If you have one share of a stock that runs up $300, how much do you make? Simple math. One share of a stock that runs $300, how much do you make? Make $300, right? What about a stock that's 90% that you trade 20,000 shares of? Do you see where the difference there comes in? Those big stocks, you can't leave a lot of money into them to become, if in the way that you give yourself a raise in trading is not making a stock do something you want it to. At the end of the day, is Facebook ever going to trade more than what it was going to trade if I wasn't in it? Am I essentially really, and don't get me wrong, you can a little bit, but at the end of the day, okay, if Facebook was going to move $5 today, am I going to make Facebook run $12 today? Is that ever going to happen? No, of course not. So we can't, when we want to give ourselves a raise as traders, we can't make a stock do more than we want it to. What happens is you get greedy, and that's how you end up losing money. But what we can do is we can add more shares to the exact same move that we see. So on a stock like TLRY, let's say I normally trade 1,000 shares. Let's just put a number out there just so we could use it. If I normally trade 1,000 shares on a stock, okay, on a stock like TLRY that does something completely nuts, am I going to trade that same 1,000 shares? Or would it be a better question? Would it be smart for me to trade that 1,000 shares? No, you'd be nuts. Once again, the percentages aren't there. Yeah, you're going to take a smaller lot because there's more risk that's involved. The more risk within a trade, the less you're going to take. Okay, so when you have a stock that, that shows 90% of what it's going to do, and don't get me wrong, IGC is telling us, please do not get it wrong. 15, I think, is a conservative price target. But when we think about the actual risk behind IGC and what could happen, we've got news, we've got lawsuits, we have a billion different things that could actually happen as it comes up. What that tells us is that our money has more, it's exposed more. There's more risk that comes back into it. So I'm going to use an example right now, and I want to use it with OGEN, just to give you an idea. Okay, the one thing I want everyone here to write down. Okay, and if you're new or if you're old, I don't really care. Just because a stock moves a lot, does that mean we trade it or should trade it? Absolutely not. Luck does not make rich, consistent traders. Think about that. Luck does not make consistent, rich traders. It's not going to happen. There's only the market does not have a lot of luck in it. Okay, unless your first day, a lot of people they'll make a trade and they end up getting very lucky on it. They make money, they don't know why. Making money without knowing why is the most dangerous thing that could ever happen to a trader, and that's something that we all have to understand. Okay, but luck is never going to work forever. Never met a good trader ever, or any trader that's, I got rich because I got lucky every single time that I ever traded. It doesn't happen like that. So we have to understand. So OGEN, let's talk about this for a second. Okay, let's look at the chart. Everyone look at the chart for a minute and just let your thoughts go on what you see there. How many times did OGEN print at 3? How many times did we print at 3? And I don't need the exact number. I know I stopped counting. I don't, somewhere like that. I don't even know, okay? Because I stopped counting after a certain point because there's no reason that I need to anymore. Okay, but let's say 5, 6, 7, somewhere in, whatever that range, okay? I would need 30 notepads a day if I wrote down everything at a certain level that we didn't need to, exactly, we stopped counting. Okay, where does this stock have to go? And I wanted to actually put this statement, and I didn't get to read it because I was walking around, but exception stocks are like high percentage in the fact that you need to see a ton of exception stocks to see why and what they are doing in that particular exception, like bullying. And being an exception, you can still can't give it a high percent, and that's exactly what it is. It's screen time. I call them calculated shots from the hip, because technically right now, if I followed my, the high probability rules, I could not trade IGC until it went underneath 9. So essentially, any trade I take in IGC right this second is a calculated shot from the hip. It has a high percentage because of what I've seen and what I know, but essentially, it still should be pulling back, and that's a great point that you made there. Okay, and yes, so let's go back. So above 3. Okay, anyone not sure why we need to go above 3 here? Anybody? Okay, very simple. Tons of buying at 3. They need to make their money. Done. But looking at this right now, could we ever enter? Even though we know 85% chance we're going to be correct, could we ever enter? Oh, 100%, Nitesh. Okay, so on a pullback, we know it has to go above 3. So technically, if on a pullback to 290, can you enter? Should you enter? Would you enter? Would that make any sense for trading? Or a long time? I don't care if you're trading. I wouldn't trade options because it's so damn cheap. But if you're looking to get into a trade, would it make any sense ever to get into this trade right this second? Because we know it's got to go above 3. So how could, you know what? I'm not going to be wrong. Is there anything that says that this stock will not pull back to 1 cent before it goes above 3? Does anyone see that anywhere? So another big problem, especially with people that are trading a little bit more longer term, so days, weeks or whatever it is that the stock is lower than where it has to go. And you basically end up forcing an entry. There's no entry in a stock just because it's lower than where it has to go. Does everyone understand what I mean here? And Tracy, absolutely, volume and price action is where it comes down to. Okay, is there any, you can't just because the stock is lower than where it has to go does not mean that it's time for an entry. And a lot of people I see out there, that's what they're doing. That's what you're doing. And I'm not pointing anyone out specifically. I know it's something I used to do. I know the stock has to go above a certain point, but guess what? I can't take it right now. What if we look at this chart right now? Just the chart alone, what positive variables does this stock have? What positive variables does this stock have right now, looking at its chart? It's holding in that consolidation, absolutely, Vince. Have we ever seen a consolidation that's holding break? And break below that consolidation? Have we ever seen that before? Yeah, of course we have, right? So is that a reason, because it's holding, to ever take a trade? Remember, percentages. Everything it goes on percentages. That's our lifeline. Nope, can't do it. Because it's holding right now, which is phenomenal. That is a perfect reason to continue to watch this stock for a trade. But if we see, and did anyone have a good percentage on the amount of times that it was holding and broke and then the amount of times that it didn't? Is there a higher percentage to either one? And once again, I'm playing devil's advocate here. Do I think it's going above 3? Hell yes, I do. But at the same time, there's no trade. Well, see, and I don't even know if it's 50. I have no idea, Tracy. I don't pay attention to it. Holding to me is a variable I could add. It's not a variable to trade something. And that's where it comes down to. So we know it needs to go over 3, and it comes back to that fear of missing out. So everyone's always afraid to miss a trade. If you miss a trade, what's going to happen the next day? And that would be a guess, Eddie. I've never done the math, and I don't really care, to be completely honest with you, because I need more variables before I'll ever take something. Yeah, the next day, guess what? We're gonna have another trade. Promise you. I promise you, every single day you will have a trade. That will never change. There will always be at least one trade every single day. And I'm saying that as there will be one trade. Guys, there's going to be a lot more than one trade each day. But there always will be another trade. So if you miss it, there's no reason that we have to be into something and be in a stock worried about missing it, because if it doesn't give us what we need and then it just starts running and goes on a rampage, there'll be another one. Okay, the first time ever when Dries moved, that was the first stock that I ever made $100 on. And when I say $100, I mean literally the stock moved $100, and not that I made $100 profit. Okay, did I ever think there was going to be another one? You think that I ever thought there was going to be another one? I didn't know. Statistically speaking, there would be, but I had no idea. But do you think that I was going to be sitting there looking for another $100 trade anytime soon? That's something that I would start to focus on and get into stocks that look similar to Dries, hoping that it was going to go to $100? No, absolutely not. And then LFIN, 141, I went up $100. Okay, and the crazy thing about a stock that goes up $100, if you're smart, you actually don't make as much money as you think on them, because you're not holding everything that you would normally hold on a stock that's moving $100. David, I promise you, I can and I can almost, and I'm not gonna guarantee you, but I can to a 99.9% chance guarantee you there will be another TLRY. Without a shadow of a doubt in my mind, there will be another TLRY. What do we look out for? How do we know a stock's going to go up $300? What are the signs that show us that's going to happen? Anybody know? Because you know what? I'll take your class if that's the case. Well, see, news, Keith. Certain news brings certain things higher. You know what? I personally don't know off of news. News is usually a great catalyst of something that happens like that. But guess what? See a big volume. We see big volume all the time. Does big volume tell us a stock's going to move $100? You see what I'm saying here? The news about TLRI only happens when it was only exactly almost $300. But you guys see what I'm saying here? There's no way in the world, and we just got more prints at 3. Okay, statistically speaking, this stock has to go above 3. And as always, this is just for education as we're talking about. I don't want anyone to take this trade and then be real upset if something were to happen. But statistically, this trade has to go above 3. Doesn't mean we're going to buy into it. It doesn't mean it's a high probability of buying into it's going to give us anything. Okay, so we have to understand there's trades to take and there's trades that are shots. They're literally a shot. No one, and I don't care who you are, no one knows the stock is going $100. I don't care what anyone said. I knew the stock was going to do this. No, you didn't. You didn't know the stock was going $100. Is there any indicator in the world, guys, that's going to be $100 away from the stock? They might have made one for TLRI now, but is there anything in the world, any indicator in the world that's going to be $100 away from its stock? Anybody? Is that possible? And I don't use indicators, but I can, and you know what? And I've never looked to see if there's, but there's not a chance in the world. That would not be a real indicator, because if it was, that would be nuts. There's just no way that could ever happen. You see what I'm saying? So you have to focus on these things, okay? And understand that being in the right place at the right time is how you get a stock to move $100. But it's following the prints every single time. And the biggest thing I want all of you to take out of this is I want you tonight to think about your trading and assign yourself a level between 1 and 10. Okay? How well you do trading and how well you can read trades, assign yourself from 1 to 10. If 1 is the lowest and 10 is the highest, if I'm a 1 level trader, what percentage do you think I should have to see in order to get into a trade? Eddie. If you're a level 1 trader, which essentially means you don't know much, what percentage does the trade have to be in order to get into it? 110%. No, it's got to be 85 plus. It's got to be huge. Because if you think a trade is 60% as a level 1 trader, and this is, guess what? We all started somewhere. At one point, I didn't even know how to read time and sales. So you have to understand that. I'm not picking on anybody, but at one point I had no idea about bid and ask. I got confused, so confused on them. But that has to, if you think a trade is 60%, what do you think the trade really is as a 1 level trader? Yeah, somewhere like that, 30, 20, 10, 0, anywhere that ridiculous. Probably, 20% is a good, 30, 20% is a good spot to come into. Okay, if you're a 5 level trader, what percentage do you think you should see in order to take a trade? We have to, you guys, we have to think about that. 80% is a little high, Keith. I'd say like 70 to 75%, because if you think it's 70 to 75%, you're probably going to be a little bit low because you're a 5 level trader. If you're a 10 level trader, what percentage do you think that you should use in order to take a trade? 10 level trader. Has to be, and that's the perfect answer, has to be above 50%. If it's above 50%, you can use feel now as a 10 level trader. And from 7, 8, 9, and 10, you can start using feel a little bit. If you're only 7, then you know what, I wouldn't use as much feel because there's always going to be higher probability things out there. Okay, but I'm going to tell you, I take every single trade that I think is a trade, every single one of them. Okay, am I wrong sometimes? Absolutely, no question whatsoever. I do, I make mistakes, 100%. It happens. Every single person here is going to lose a trade. At this point going forward, if you're a 10 level trader, promise you, within the next day, you'll lose a trade. Unless you're only taking 90% trades. But if you have that much ability and you're only taking 1 trade, a day, then that's just you're not utilizing what your ability is. Because if you're a 10 level trader and you make a bad trade, what's going to happen? Is that something that you really have to worry about? No, because the next trade is going to work. So you take everything that you see, and then it just and you'll be fine. And not only fine, but make lots and lots of money. All right, let me get to these questions now. Everyone clear on this? Okay, that's the topic that I want to talk about. I know it ran a little bit long, but at the same time, I don't care because of the fact that you need to know this. This has to happen. Without understanding this, it's hard. As a 10 level trader, it's easy. You know what? Because there's not much work to do anymore. You see something, you take it. That's simple. But when you're, under a 7, there's a lot of work that still needs to happen. So you need to really be focused on picking the right stock. Because what happens is that there's sometimes you could be the best trade in the world. If you keep picking the wrong stocks, and the wrong stock, you're picking things that aren't showing you anything, what's going to end up happening is even though you're a great trader, you're going to make shitty trades. Okay, IGC, and I just want to, this will be at the end, and I have those questions that I want to get to. But if we look at IGC right now, was there a trigger in here? I don't know. I wasn't looking. No, because see, we just got more prints at 30. So see, this trigger coming back down would absolutely have been a trigger, but all these prints at 30 told us it was going to pop right back up. And I just lost my train of thought answering that. Sorry, I completely forgot where I was coming back to it, looking at the prints. But either way, everyone IGC, I got you. Okay, thank you, Keith. Okay, so IGC, if we look at this right now, do you think everyone today made money trading IGC? And when I say everyone today, I don't mean us. I mean every single person in the world made money trading IGC today. What do we think? Do you know how many people are cursing this stock because it's absolute bullshit and they hate it and it's terrible? And you know what? It went up all this amount, but I lost this amount. And then I tried to trade again. And I lost this amount. And I tried to trade again. I lost this amount. So even though IGC's up a lot, you got to think every single time that you make money, someone's losing money. And I can see in these type of stocks, I can just see exactly when these people are going to get slammed, and I hate it. But guess what? It's part of being in the market. If you want to trade, you have to understand this. And this is why the classes that we go over, the classes that I do, the workshop, we're going to be talking about prints. I have a lot of great information. It's coming along. I'm almost done, and I'm very, very happy about it because it's going to be so freaking important to understanding what we talked about today. That's where there was that one question about the OGEN, which was a good question. And you know what? We have to learn from someplace. Okay, about whether or not to get in. You're probably going to be right, but you don't want to put your hard-earned money at risk there. But that's why we do this stuff, is because what you guys know, even if you started today and this is your first traders exchange, I can promise you that you know more than 90% of the traders out there after this one conversation. This is why we put the work in, because when you put the work in, okay, you understand what's going to happen. You understand what people are doing, why you're making money, why you're losing money. That's the only way to continue. Another 1.5 page bid prints in AMD. Ooh, that's not looking good. AMD is going to fall real big before we end up seeing it come back up. You're probably going to be looking for earnings or something. You're going to need some catalyst in AMD to get that thing back up to 35. Doesn't mean it's not going over 35 eventually, but looks like we're going to have a pretty nice ride towards that downside before it does happen. All right, so let's take a look at real quick at these at some questions. Okay, I took a look at the past Traders Exchange videos and ran into these questions. How do you know when to pay attention to non-major minor prints? Examples 1038, 2719. Also, when do we ignore them? It's just based on how many prints are being printed overall that day. So no, that's not the answer. The answer is the prints, when we come to the minor prints and the prints that are not minor prints, but prints that come in at other weird levels, okay, we're not following those. They give us a little idea of what's going to happen, for a short period of time that comes up or down. What we're looking for is to find the major market maker. For instance, right now, perfect example, if we go to AMD, okay, AMD has a page and a half of bid prints at 31. Okay, does anyone give a shit what happens right now at 30.25? Or should you? Should anyone care what happens right now at 30.25? No, not at all, because what's going to happen? A page and a half of bid prints at 30 tells us what is the stock going to do right now? It's going to pull up a bunch, and then it's eventually going to fall below 30. So the prints there, it depends. Those prints, if there's nothing else out there, it's something to pay attention to. But when you have a dominant market maker that comes in and shows you exactly what has to happen, ignore them. That's when we ignore those prints. Question 2, say if there's a huge buy print at a major level, if market maker continues to build a position from the below their show of hand prints, aren't they technically averaging down? If so, can there ever be a case where the price target is less than $1 from their show of hand price? No, see, the thing that happens is where the prints start. So let's just use an easy example. A stock is $5. If we get tons of ask prints, okay, at $5, let's say it's the amount of ask prints tells us the stock has to go to $5.50. The stock could go to $2. It's irrelevant because what has to happen is they need to make that 50 cents from where the $5 originated from. Their original position needs to make that. That's what showed us. Okay, so no matter what, yes, they're averaging down, but they're not averaging down, they're building a position. Averaging down is when somebody goes out there and they literally they take, they make a shitty trade and it goes lower because they were wrong on their timing, and they buy it lower to average that price down because they still think it needs to go back up. Building a position is when it goes lower, like today when I was talking about an IGC, when it pulls back, I'm buying more. I'm not averaging down, I'm building a position, because I can't build let's say a 10 million share position. Can I build it all at the same price? Is that possible whatsoever? Can anyone build a 10 million share position at one price? No. So there's a difference between building a position and averaging down. Averaging down, essentially, from the most part, means you made a shitty decision. Building a position means that game plan was in place first. So you knew what you were going to do before it happened. It wasn't, oh shit, the stock didn't go where I thought it was going to go right now, so let me get it lower to make that price difference. All right, I know I'm blowing through these, but I know we don't typically trade penny stocks, but do prints work differently in pump and dumps? No, essentially you could see exactly what happens in a pump and dump. The prints, really kind of just show exactly what's going to happen. You end up going up. You have no buying there. If you have no buying and the stock is flying back up, it's called a hollow move. And that hollow move, we end up seeing it come back down and just end up crashing back down. Stocks cannot continue, and this is the stocks cannot continue under two circumstances. Number one, if there's no new buying, a stock overall cannot continue to go up. If no one has to make money as the stock is going up, it's coming right back down. And the second condition is a stock cannot go up on no volume unless it's a stock that trades no volume regularly. So if a stock only trades 10,000 shares a day, let's say, stock could go up for all day long on 1,000 shares, on 2,000 shares. But a stock that goes up on a stock that trades a decent amount of volume, that goes up on no volume, is going to come back down. Let's see. All right, next. Okay. This question, how do you choose tickers that have potential for a trade? Where are the steps when you look for new stocks to trade? Okay, basically, and just to put this in a nutshell, because there's a lot more that goes into what I look for. But number one is volume. If a stock doesn't trade volume, I cannot trade it. Number two is prints. If a stock does not have controlling prints, I have no idea what it's going to do, so then I can't trade it. So those are the two things that I really look for. Okay, is volume. So that tells me that people are interested in it. And number two is prints, that's the controlling prints that show me the direction where the stock has to go. Let's keep just blowing along on this. Okay, hey Rich, simple question, but when looking at prints, do you only care about the large prints that are 1,000 plus, or do you still look at all of them? Okay, so there's two answers to that. Number one is the easiest way to go about it is controlling prints will always have prints over 1,000. Okay, and when I say always, I don't really mean always, but the highest percentage, you'll always see big money coming into it. Big money doesn't want to sit there and trade 100, 200, 300, 400, 500, shares coming, so I focus a lot on that. And the reason you see me focus so much on that is because teaching wise, it's easier to show you. Okay, going back to, to time and sales with all hundreds and 200, it's just a lot harder. Okay, but I focus almost 90% of the time on the regular time and sales, because you have situations when a stock has a limited amount of orders out there. What happens is that if you put an order out, let's say for 10,000 shares, what's going to happen is you're going to see bursts of hundreds, 500. You're going to see these big bursts of smaller prints, but they're actually one position being taken. It is way harder to do that, and I would not suggest that in the beginning, is to try to do that. But as you get better within your trading, there's sometimes where you could see at a level there's tons of prints. It's just the orders aren't there available for it to actually print in 1,000 plus. All right. And then let's get to the last one. I've got a question regarding the print's behavior. Correct me if I'm wrong, but I've often noticed that usually one of the two things happen when print is made. For example, if there was buying print at a major or minor level, it follows the rules and pull back accordingly before making an overall move up past the printed price. Yes. And if it does not pull back and just blast past to the printed price. Okay, so yes, you have two scenarios. Okay, as you're following the rules, don't get caught just staring at time and sales. Okay, so if you're following the rules, what's going to happen in every single trade that you ever take? And like, for instance, if we talk about IGC, you get your prints, your controlling prints that come back in, they need to pull back to an expected level. Okay, and we're going to go over this so much further in depth, I promise you, on how we can tell the time frame in our workshop that we're going to be doing on October 10th. Okay, mark that date down. Okay, but there's certain prints that show you long term. There's certain prints that show you short term. Okay, technically IGC is telling us that we can't trade it until it goes underneath 9, and that's the exception point. But when it blows past, it's the prints that come in afterwards that are showing us bullying. So those two scenarios, a high probability trade, okay, it means a different thing to a 4 level. And I told you guys, your homework tonight is to figure out what level of trader you are from a 1 to 10. Okay, but if you're a 4 and the stock doesn't pull back, you don't trade it. That's simple. Nothing. If you're a 1 and you even think about it, then I've taught you nothing coming into today. All right, but if you're a level 8 trader and the stock's getting bullied, you're going to trade it. There's no problem there. Stocks get bullied. It happens all the time. It's just not a high probability position for someone that doesn't know every variable that's going on within the stock. You have to remember, my rules are made for the whole. Okay, there's not a lot of 10 level traders out there, and mostly because I really haven't had the time to teach people to get to 10 level traders. I know plenty of 10 level traders. I have plenty of students that are 10 level traders. Well, to an extent, you are very, very good traders. If you didn't wait for the pullback, you would have been caught in a nasty bar. Yep, good example right there. I found myself doing that. So it depends. Depending on what level trader you are, if a stock does not pull back, you don't trade it. That's simple. Because guess what? How many high probability trades do we see in one day that pull back the exact amount we would have expected, trigger up, and make us a lot of money? How many of those do we see? At least a handful every single day, right? So there's no reason to go out there and trade something that doesn't follow exactly what it should do when there's things out there that are. But when you get to a certain point in your trading, you're literally going to make up your own rules, and not overall. So the overall rules, the foundation will never change. Everything that I teach you, you will never change that. But you're going to take certain things because you know better, because you've been there for thousands of hours sitting there on that screen time. So basically what we're going to end on is that if you're under a 7 level trader, the stock has to, and if you want to really get consistent and get good at this, the stock has to do exactly what you expect. If it does not, and you take that trade, it is not a high probability trade. Guys, I can see certain things, and you've seen me say it before, and you've seen me call out things that didn't really show, but I can see things that are going to happen that it doesn't show you why it's going to happen. It's something in my subconscious that I've been doing this for so long. I've spent thousands and thousands of hours watching these stocks, and there's certain things I just know is going to happen. And guess what? I'm going to trade it because I can, because I've put that time in. But if you're under a 7 level trader, you don't have that luxury yet. You don't have the luxury of deciding that this will happen if it did not follow exactly what it said it was going to do. All right, guys, I know I just kind of went through those really quickly. Any questions? I know we talked about a whole lot of things this afternoon. Once again, the recording is always going to be available afterwards. IGC, see, this is where we go. See, just because we know the stock needs to go above 1450 does not mean we get in because of this reason. There's no reason to have that added stress. All right, guys, we all good? Yes? All right, beautiful. So obviously, we're going to keep IGC, we're going to keep IGC, OGN, and NBEV on our list. Also, SFIX, we have beautiful prints that are sitting there at that 30 level. So right now we just came back down, and if we look right here, we can see that there's another spot, another burst of prints. Not really that many, but you know what? It's a low volume time that we're watching right now. So we see more prints that came in at that 30 level. All right, we're going to be expecting this thing to drop more. Now, one thing is that the range. I mean, it's moved $5.19 today. So overall, we need to make sure that we understand there's a big chance that we're not going to get more of a range today, especially at the 30 level. 30 is a big psychological number. It's going to be harder for it to break. So coming into there, we would really need to see a big trigger that comes in to confirm that the stock is going to continue. Now, if you're already holding this from earlier when you should have been, then guess what? Let it ride. Until something might show you differently, but we'll continue on from there. And that's pretty much, guys. I haven't been watching. You tell me. Anything else out there? DTA, that was on our side list. Made a really nice move up, but I wasn't watching, and it looks like it's kind of getting sold off a little bit, especially with those bigger amount of shares. So I don't really see that too much that's really going on there. Let's take a look quick at the scanners. VT. Well, VT is, it made a really nice move up to that too. I don't know what the prints here were. It is holding pretty well, but another one, I just don't expect a lot because you can see the volume down at 20,000 shares per minute. Just not really too much going on there that I care much about. AMD, obviously, pay attention to because after we're done with that pull up, underneath 30 is showing a lot of room based off of the prints that we had, and that's I've seen all of these before. That pretty much looks like it. So SQ, that was a phenomenal trade coming up this morning. We talked about in the morning meeting. The morning meeting is on YouTube, our YouTube channel. You could go look at it. But I told you guys, do not forget about SQ because the prints at 100 after yesterday, after falling back and pulling back that much, we were going to be looking at it coming back. And guys, it came down. We got a beautiful trigger up. It doesn't get any easier than that. We literally talked about it before the market even opened and before it really even showed us anything. So another good one there, but definitely keep an eye on that as well. All right, guys, as always, I hope everyone learned something today, and when you take it and you go apply it to your trading immediately, okay? We don't go over these things because they're not important. They're foundations and building blocks to how you get to where you want to be trading. All right, guys, so I'll talk to everyone in the chat room, and happy trading.